Welcome to Monday Thoughts for the Week, a production of Global Agritrends. Clear, concise, market intelligence. Here are your hosts, Brett Stewart and Simon Quilty.
Good morning, Simon. Good morning, everyone. And Simon, we're back.
Happy New Year, I say.
Yeah, Happy New Year on January 16th. It is exciting. And just so everyone knows, we haven't been asleep here the last 3 weeks. We've been working pretty ambitiously to get those interviews out that we were able to send out. And we had 3 interviews all focused around different aspects of China. And I thought that was... I thought the interviews were fun. I found them very insightful. I hope they were of value to everybody. So today, off to the races. Here's our summary, and you can glance through this and go ahead and pull your slider back and forth to wherever your interest level lies. But I think we've got something for everyone today, Simon. We've got a little bit of everything. And just to start off here for the new year, I threw this together on New Year's and put it on my Twitter account. But I said, here's the 2023 Global Ag Bingo card. And what we can do, Simon, we'll just maybe 12 months from now at the end of the year or during the year, we'll check off and we can drop bingo coins on and see where we land. But I almost wish I'd taken this a little more seriously now that we're talking about it with everyone. But whether it's food riots and regime change, or a bust in China, or a boom in China, energy crises, global recession, take your pick, right? China invades Taiwan, some new bird flu spreads to humans. Who knows what this year brings? And humblingly, I suggest that probably all of the major things that happened this year, none of them are on that card. And if I'd done this a year ago, that would have been the same thing. So I should have put about 5 good blanks on there that we could fill in later. But there's the bingo card for the year.
The year of the rabbit as well, Brett.
That's right. It's the new Chinese New Year, and that begins in a week. Yes.
So, Brett, record rains in northern Western Australia in the Kimberley area. And Brett, it's been quite an extraordinary 2 weeks, 3 weeks in terms of the impact. And you can see the torrential downpour that came about on the back of an ex-cyclone that came through the region and really had a huge impact, particularly in this area around Fitzroy Crossing. And Brett, one of the big questions asked, and we never enjoy or these heartfelt moments when unfortunately people are going through these difficult times, but we did do a fair bit of work in the last week on trying to ascertain the losses in terms of cattle. The best figure we've come up to date is around 50,000 head that may have been unfortunately lost in a region that normally would probably hold about 400,000 head, Brett, all up. So the photos are somewhat graphic. I think, what's extraordinary is that this is seen as, almost once again, a 100-year event occurring. Yet we keep saying that, Brett. It's the final throes of La Nina. Walk us through, I guess, where things are at on La Nina.
Yeah, probably the biggest story we could talk about, Simon, and if we were psychic, we would tell you what's going to happen, is just what's happening with this global weather pattern. Right there, that's the current map of the sea surface temperature anomalies. It's January 8th. That's the most recent data. And of course, that red box is the equator. And so what we've learned is when that sea surface temperature gets really warm on the equator, it fuels evaporation into the jet stream over North America. Now, Australia, you can see the green box there. There's a lot of blue water north of Australia right now. Look at Indonesia. And so there's definitely cooling happening right in that area, Simon, where you showed the flooding. It is cooling there. So if we take a look at where this is a year ago, this is that same map a year ago. And so that's the La Nina. Look how much dark blue there is in the Pacific. And look at all that warm water surrounding Australia. That's La Nina. Now let's go back and look at where we are today. Very different story, right? We still have blue in the center, but there it is a year ago. There it is today. Look at the dark blue across the equatorial Pacific. it's a different story. Look at Australia, a different story. And so, Simon, you may be right. These might be the last throes of La Nina really causing floods in Australia and droughts in North America. But we've talked to Dr. Douglas. His suggestion is this may happen a little sooner than people realize. He was suggesting April, May for the change, and it looks like it may be happening a little bit quicker when you look at these charts.
Possibly February, March, yeah.
Possibly. So that's a big story. That changes everything. That changes our cattle cycle in America. It changes the cattle cycle in Australia. It changes the global grains balance sheet. And so if there's one big issue, that's a big issue. If there's another big issue, it's what happens in China, right? And China's risen to the top of the heap of every major commodity in terms of an importer. Take a look at this data. I assure that this data is fully verifiable and bulletproof because a Chinese guy gave it to me on Twitter. So it's got to be good, right? Actually, on a scale of 1 to 10 in Chinese data, that's probably on the upper half of the scale. Some Chinese guy on Twitter. You just don't get good data out of China. But this was some data that he had sent me. This is the COVID cases. This is some case counts. Now, the government hasn't really reported case counts, but these were some city case counts that he got his hands on. And what it shows, one thing that surprises me, Simon, look at the peaks. In Guangzhou, the largest city in China, if you look at the Guangzhou metro area, it's 30 to 40 million people if you include 3 other cities that are growing together. 30, 40 million people, they peaked December 21st. Chengdu, December 15th. Beijing, December 17th. Now, the Chinese government lifted restrictions December 8th. How do you lift restrictions on the 8th and have a peak in infections 8 days later? I would think it would take a little longer. And I guess what that would suggest is this thing was probably already spreading pretty aggressively when they lifted those restrictions. I would guess they had no choice. The toothpaste was out of the tube. They just lifted the restrictions. But the second thing that I find interesting, look how fast those waves ended. Now, China has some of the highest human density on Earth. Viruses, highly contagious viruses, are going to have some wild waves, right? They're going to go really high. Everyone gets it instantly, and then they go down. And so this is good news. And we've all been through COVID. Everybody on Earth, every country's been through these waves. What this is showing, the waves are over. I saw a video, Simon, of people in Wuhan celebrating, and they were just packed in the streets, releasing balloons, cheering. And we all know that feeling. We've all been through lockdowns. And what happens when they finally lift lockdowns and we can all go out? It's euphoria. Now, what happens when it's been 3 years of lockdowns? Then it's probably even more euphoria. And so there are a lot of people in China booking plane tickets for the first time in 3 years. They're planning their shopping. And granted, it isn't over, right? There will be more waves, and it probably hasn't really hit the countryside yet. But that will be coming. Chinese New Year's next week, and there's a lot of city dwellers heading for the country next week.
Brett, it's the start of their spring festival, and that festival lasts for 23 days.
Okay.
And, without doubt, it seems the rural areas have yet to really peak. But once that travel starts, it'll be quickly throughout the rural regions of China. And I think, Brett, to be honest, the sooner the better.
Yeah, I mean, it's tough, and you watch and you see the videos of bodies in the street and funeral homes backed up, and I believe it's millions will die from this. I mean, 0.5% in China is 7 million people. But the reality is this is a virus that no one can really work around. It just has to run its course, and we've all been through it. And so, yeah, I think this could have a major impact, Simon, on this 2023 economy. I think the Chinese are cash in hand, ready to spend money. And whatever that domestic demand in China can fuel, we're going to find out maybe in the first or second quarter.
Well, Brett, that leads us into our next discussion, which we did the interview with our 2 experts on foreign exchange, David Lewin-Smith from MB Fund. He's the chief strategist, and Will Johnson, Director of OT Sales at Marex Solutions. Brett, it was a fascinating discussion. You were part of it with me. I think a couple of things. First of all, a summary of their views. David has got, in the short term, the Aussie dollar, which is hovering around 69 and a half today, falling back to 66 cents within 3 to 6 months. Within 12 months, getting to 70. Within 2 years, 75. Will, he spoke more of 6 months out. He's at 70 to 72, within 12 months at 72 to 74. Brett, I don't think they're too far off each other, but I think the most enlightening part of the discussion, as you know, came as we debated many other factors. And so some of the key points was that David is of the opinion the US will have a mild recession within the next few months. And from Will's point of view, globally, he wondered if we're in one already, and we've raised that point before, as you know, and potentially coming out of it soon. But to the points that we've just raised on China, China will see a consumer-led recovery this year. And this is highly unusual for China. But normally it's manufacturing, export-driven. But this time, because of that euphoria, the lifting of the restrictions, and now we're past the peak, a consumer-led recovery looks like it's on its way. David is of the opinion that hard commodities will suffer this year, such as coal, iron ore, and even the energy prices, and softs will do well, meaning anything grown in terms of agriculture are all classified as softs. So meat demand, sugar, cocoa, you name it, the grains, etc. They were of the opinion that Europe has avoided a hard landing economically due to such a mild winter and I guess the less reliance on energy. Fertilizers and grain prices to potentially soften globally. So I guess that's on the back of potentially, energy prices finally easing, Brett. And the worst is yet to still come on interest rates and inflation, with the expected peak in June this year in the US, and in Australia to probably lag 2 to 3 months. Brett, what were your thoughts after that interview?
Yeah, I thought it was insightful. I really appreciate these guys being willing to kind of put a stake in the ground and give us their thoughts. And I think they have a good read on things. I mean, nobody is psychic and nobody knows the future, but I think based on the data that they see and their opinions, I think this is valuable information. I agree. China will see a consumer-led recovery, and China's wanted for years to have a domestic-driven economy. It's unproven whether that can even work, but whatever they can get domestically, we're going to see this year.
Agree. So, Brett, in the last 3 weeks, China's come out and said that they will stop testing chilled and frozen imports from around the world. And that came in effect January the 8th. So, Brett, it's been going on for 3 years. It's created bottlenecks at ports. It saw 206 plants delisted globally, would you believe? So, and different parts of the government were kind of doing different things. So the China State Administration for Market Regulation said they no longer require all imported chilled and frozen products to be centralized in warehouses, disinfected and tested before going domestically. And then China Customs came out and said that they would also stop testing cold chain food arriving at the port's entries. So 2 fairly significant, you might say, government departments have pulled back. It's been estimated, Brett, that the cost of that particular policy was about $4,500 per container. That's with the testing, disinfecting that went on, the movement of goods from ports to central storage, demurrage, electricity, and centralized storage costs. And Brett, for what it's worth, the last figures we looked at as we said, 206 plants delisted over the last 3 years, 96 relisted. So there's 110 plants to be reinstated into the China market. Beef, 49 of them, the largest, followed by pork, 20, and poultry, 33. Brett, I think this is important. It makes a difference. Now, according to the various people we speak around the world, these reinstatements haven't quite happened yet, but let's hope that sooner and not later.
Yeah, right. I've yet to hear of one plant being relisted. So they've been quick to say, we're making all these changes, we're not inspecting. They didn't rush out to relist the world's meat plants. And I don't know. I hope that's coming.
So do I, and particularly from an Australian point of view. But Brett, since we last spoke to our customers and subscribers, relations with China continue to improve. China is now allowing imports of Australian coal for the first time in 2 years. And only last week in Guangdong, last Thursday, custom officials started to clear coal shipments through that port, literally days after the approval was given. So, Brett, that is very reassuring. They still maintain restrictions on wine, barley, and lobsters, with 10 meat plants still unable to export to China. But let's watch this space. China has reportedly offered to drop the trade war if Australia withdraws its complaints to the World Trade Organization about bans on certain goods. Brett, we know that the WTO is somewhat almost defunct. So to me, I'd be withdrawing completely if this speeds up the process. Mm-hmm. Interestingly, Klaus Pemminger with the GrainCorp in Australia, in the Fin Review last week, said he saw positive signs of resumption of barley sales to China. We know that wheat sales have been particularly strong. So, Brett, right across all the various commodities, there's good signs that things are improving. And China student visa applications were up 40%, Brett, in the last half of last year. And in recent days, China education agencies are saying that there has been a massive rise in inquiries. So it's happening on many fronts. There were strong rumours in the Australian market last week that the plants that have been held off from exporting their licenses that could be reinstated. Now, many believe it could be in the back half of this year, Brad. But let's wait and see. I've reached out to our friends at the China Embassy to see if we can get some guidance from them. Brett, fingers crossed.
Yeah, for sure. Interesting. Okay, we got the data for December on the global food indices. And Simon, I think it's safe to say, when I look at this chart, the commodity super cycle has ended. And what I mean by that, I don't mean we're going back to those previous pre-pandemic levels. What I'm saying is all of the froth and the speculation and whatever it was out there that drove things completely insane, that's over. Now, here's the asterisk. If you look at the global food index, look at that orange line, it's right back almost to trend line. The global food price at trend line is still 25 basis points above where it was December 2020 or January 2020, pre-pandemic. And so I guess what I'm saying, this commodity cycle is broken. We've taken the steam out of it, but the reality is trend line is still 20 to 30 basis points above the pre-pandemic level. I don't think we're ever going back, or anytime going back to those pre-pandemic price levels. I think a lot of these prices are going to stay high and be high, and that's going to be our new normal. And as soon as the calendar hits 12 months, then inflation goes to zero and resets, because we only measure 12 months on inflation. But I think that cycle is broken at a very much a new and higher trading level for most commodity prices.
I agree.
If we look at just the meats in that database, pretty interesting here. You know, from mid 2022, we saw the poultry price break. We saw the beef price break. Pork prices came up, lifted there by China, but they're now falling in China. We'll probably see that pork price fall, and beef is going back up. But grains remain stubbornly high. And so grains being the input to the other three, beef down, poultry down, grains still very expensive. And that's really pressing on those margins globally in the protein space.
And Brett, we had Amory Rowring from 201 Analytics come out with her December market update on US meat demand. Brett, the findings were interesting. You know, the work done by IRI found that in their shopper survey, 93% believe grocery costs somewhat a lot more this year than last year. And 97% are somewhat a lot more concerned about it, particularly lower income. The inflationary pressure on income is real. 43% of consumers say their current financial situation is worse than last year, with an additional 31 expected to be worse from a year from now. So they're somewhat pessimistic, Brett. This has led to a host of money-saving measures. 82% of buyers are making changes, you might say, such as buying what's on sale, 53%, cutting back on non-essentials, 45%, and looking for coupons, 35%, or switching to store brand items, 31%. The December IRI survey also noted a sharp uptick in the estimated share of meals prepared at home. Basically, people are not going out as much. The share of home-prepared meals rose in September from 78.9% to 81.5%. So, Brett, inflation is having an impact. When we look, though, interestingly, at US meat department sales for the entire year 2022, Brett, it was a record year for sales. And so in some ways, that's not surprising with prices higher. And when you see in the blue box there, in terms of the volume sold, it's actually down 2.8%. Higher prices, but slightly less volume, Brett. But it led to that record level in terms of total sales. When we look at the US fresh meat by protein, the December figures, well, interestingly, you had fresh chicken and turkey jump dramatically in terms of sales. Brett, there's no doubt that the impact of avian influenza is huge when it comes to the poultry sector. In terms of the sales versus of pounds in volume, chicken and beef were up, but interestingly, turkey, lamb, and exotic meats and veal were all sharply down for the month of December. And Brett, when we look at the calendar year, we had dollar values up pretty well almost on all items except for fresh lamb, exotic meat, and veal. And when it came to overall sales in terms of volumes, they were all down. And so, Brett, there's the impact of inflation, higher prices, but less volume as a result. And last but not least, though, ground beef. And this truly does, I think, reflect inflation and that switching or dumbing down to cheaper meats. You've got, in terms of dollar values, everything up for the month of December. In terms of the pounds, it's pretty well, with the only exception, turkey, everything else was up in terms of volume. So higher prices, higher volume points to me very strong demand, Brett, for ground beef or ground meat in general. And we can see a similar trend when it comes to the calendar year. But Brett, I think the impact on inflation came in the latter half of the year more so. So those number of volume that occurred across the year, I'd describe it as a mixed bag. Brett, share me your thoughts on these numbers.
Yeah, that shouldn't surprise us, I guess, right? Because seeing those higher prices and reduced buying, we know that in the US that consumers are increasing debt, they're burning through their money supplies, and that's really the trajectory we're on going into 2023 here.
You bet.
So Europe's winter miracle, and this is out there in the news. You've probably seen something about it, but take a look at that chart. That's a temperature map of Europe over. It was I think it was New Year's. Looks like it was New Year's Day or right that New Year's week. But the expectation for Europe this winter was complete disaster, right? They were looking at an energy crisis. The slowdown of Russian gas and Russian oil was upon them. And then just like I say, miraculously, they have had a winter where they just really haven't had to burn much gas. You can see here in Poland, it was so warm, the January national high temp was broken before sunrise. Town of Glucolazy was 65 degrees at 4 a.m. At 4 a.m., 65 degrees in Poland, right? And I think Russia looked at this and Putin looked at this and said, we'll see if you're going to play ball in January when I turn off your gas and you're all freezing to death. Now, France, you can see in Verdun, France, 77 degrees. This is on New Year's, 25 degrees Celsius, right? The warmest New Year Eve ever in France. And so this wasn't just 1 week. They have had an incredibly warm winter in Europe, and it's completely changed the equation for the global energy supplies and really probably saved a lot of people from hardship thus far. Winter's not over yet. It's still warm even now. 2 weeks later, it's still very warm temperatures. But I just think that's pretty interesting to see happen when we talk about weather and the things that can happen. Last week, we got the WASDE report. That's the USDA estimates of supply and demand across the agriculture spectrum. We report on beef, pork, and chicken. But take a look at this. You can see the net supply change for 2022, and they chased that broiler number higher all year long, kept revising the estimates upward. We had 1.4 billion pounds more chicken in 2022 than we did a year earlier. That was 3.8 pounds for every man, woman, and child in America. Pretty big news there, and you can see it was all production-based. Now take a look at 2023. The big story is, right, we're going to take 3 pounds per capita off of the US beef market. And their forecast is 6.5% less beef produced. And so you have that big reduction in the beef available, and you cut supplies 3 pounds per capita. That's the biggest cut in 44 years. Year to year on beef supplies. And Simon, it's about the drought, right? The drought forced all those cattle through. And now we're talking about rain, which even makes this more severe. And if we come into summer and it starts raining with high cattle prices, retail prices high, which you're going to tell us about here in a minute, it's going to be a race to restock. And there are going to be ranchers that will hold every open cow, every cull cow, every cow they have, they're going to hold if it rains. And this market could get much, much tighter even than expected, depending on weather over the summer. Simon, tell us about the Australian wheat harvest.
So, Brett, even though we've been submerged in water across much of Australia, we still have had what is pretty well almost a record year in terms of total production of grain across Australia. I think it's the second largest on record. So it's going to be worth up to $12 billion, the cereal and oilseeds harvest this year across the eastern seaboard, up, significantly from last year of $9 billion. Klaus Pamminger, Chief Operating Officer, basically said that, these high prices are a result of the Ukraine war. No surprises there. The third consecutive large harvest on the East Coast. Even with the weather disruption, yields and quality have been unexpectedly good. So Klaus said this crop and harvest has been more challenging than the last two, but pleasantly surprised how good it is. But he did make the point, and I spoke to him directly last week, that the supply chain has problems, particularly with rail and truck transport in Australia. A simple thing as a lack of drivers, Brett, would you believe? As well as maintenance issues, making it very difficult for bulk handlers to get grains to ports in Australia. China is now used to buying grain out of Australia because of the uncertainty of the Black Sea, Brett, and because of the war. So there's no doubt that there's strong demand globally. This year, because of the degree of rain and uncertainty, they've added more grades to the wheat well, a lot of the grain. So additional grades have been added, and that has placed some challenges in terms of marketing, because global markets are not used to some of these other new, I guess, grades of quality that Australia has introduced due to the rain that's occurred. For what it's worth, Brett, ABARE in December, a month ago, came out saying that that the entire yield this year on the winter crop would be 62 million tonnes, the second largest on record. Wheat to reach a record level of 36.6 million tonnes. Barley, this will be the fourth largest on record of about 13.4 million tonnes. Canola to get to 7.3 million tonnes. Once again, the largest on record, on the back of what last year was a record year, Brett, up another 4%. And the summer crop in terms of sorghum is expected to, the planting conditions are down 9%, but the overall crop is expected to still be 2.6 million tonnes, the fourth largest on record. So, Brett, it's all good news in terms of Australia and the enormous harvest we've had in terms of grains this year.
That's interesting, Simon. So the wheat world is either you're on this end of the spectrum or you're on the other end of the spectrum where there's not enough wheat. And a lot of that's been logistical issues tied up around the Russian invasion of the Ukraine. The UN World Food Program estimates that there are more than 345 million people now suffering from or at risk of acute food insecurity. That's more than double what it was in 2019. And so they're seeing major shortages, high prices, real pain across some of those key nations in the Middle East, in North Africa, Afghanistan, Yemen. They've been ravaged by war. They're tight on wheat supplies. Even a country like Egypt, Lebanon, they're having a hard time paying their debts. And in a place like Egypt, they subsidize bread, right? They have the government bread shops, and the way people eat is off subsidized bread. From March to November, the Ukraine exported about 3.5 million tons of grain and oil seeds a month. It was 5 to 7 million tons a month before the war began. So from 5 to 7 million tons, 3.5. So basically half. And that still has some very tight supplies in some of those really vulnerable countries. Over to global diseases.
Oh, well, Brett, it never stops, does it? But
yeah,
in middle December, there was a lumpy skin disease update meeting. And, Brett, so what's interesting is finally we're starting to see some data out of Indonesia on lumpy skin disease. It's been very hard to get. And you can see here that the outbreaks per day, and this has been measured since March last year, February, March. But the outbreaks, we saw West Sumatra, Jambi, Aceh, I should say, North Sumatra, outbreaks were in March, April. In August, Central Java. In December, East Java. Brett, on average, when you look at these peaks in June and September, the average cases per day sits at about 15. So that means right now there's about 4,000 cases reported of within Indonesia of lumpy skin disease. Brett, it is deeply worrying. We know that it has been challenging. We're in this monsoon period where it's unclear, but the concern is that the insects that can carry this disease starts to spread far and wide as they're carried on some of those cyclonic winds that come out of there. Brett, as we move also now into an update on foot and mouth disease in Indonesia in general, the total vaccinations are now at 10.9 million head across the country. Basically, half the number in the country have got one vaccine at least. Barley's rate is 536,000 head. We estimate there's about 450,000 cattle in total. So most have received their first, and around about 20% have received their second dose. Brett, in terms of the total number across the country, 64 million cloven-hooved animals, only 17% in total have been vaccinated. But here's the worry. Once again, Brett, you can see that in probably since the start of December, that the number of vaccinations has slowed dramatically. Now, I'm not sure if this is a seasonal thing, whether the monsoons are impacting this, but Brett, it continues to be a true worry within Indonesia.
All right, here's a chart of HPAI cases across North America. And this is 2021 and 2022. You've probably seen in the news, we're up over 58 million birds cold now across North America, or just across the US. But this is quite severe, and it's record high, mostly affecting turkeys and layer hens. Now in Idaho, Simon, generally, I could go buy eggs for $1.70 a dozen. Sometimes you see them below $1 a dozen. Eggs right now are $7.50 a dozen. That's what they were last week. So we're talking 600% inflation, 500% inflation on eggs. And we're not unique. It is really having an impact on the eggs market and on turkey. You know, we've seen that chicken breast price fall to $1.10. Turkey breast is still $6 a pound. How much do people love turkey? I keep scratching my head over that one. But the disease issue remains a major problem in the poultry sector here.
Agree. So, Brett, beef and lamb thoughts. So come January 1, we've had change in duties around the world for beef and lamb. And so here are some of the things that have changed in the last few weeks. Japan, the entry there today for Australian beef is now at 23.3%, slightly down from last year's entry of 24.1% under the free trade agreement that we have with Japan. Korea, both chilled and frozen, have fallen to 13.3%, down from 16%. Now, these are all from an Australian point of view, and US beef and lamb, all duties remain still at zero for North America, for the US. Here's the interesting one, Brett, is China's duties for beef. There, the boneless and bone-in now is at 1.2%, half of what it was last year of 2.4%. Frozen beef is also at 1.2%, down from the 2.4%. And lamb and goats into China today have no duties at all. They are completely gone. So, Brett, that's encouraging, having, I guess, less in terms of duties to our key market from an Australian point of view. And I think from a US point of view, it holds pretty well the same, doesn't it?
It does. Yeah, we get to see some resets. I look at that, Simon, and I say, as good as that China phase one deal is, how did we not get the same tariff rates you guys got into China? You're at 1 and 1.2%. I think we're at 12%.
Yes.
Just beef tariffs into China, but that door swings both ways. And in Korea, the US got the jump. The Korean Free Trade Agreement in the US began in 2012, 3 years before it began in Canada, 2 years before it began in Australia. Everybody got the same deal, 40% to zero over 15 years. And so there's the phase downs. So I remember, Simon, going to Korea for years when we had a 40% beef tariff. We'll be at 8% this year, Australia at 13 and Canada at 16. And by 2026, the US goes to zero. 2028, Australia goes to zero. And 2029, Canada goes to zero. That is a game changer. When you think about how we compete with their domestic beef, huge game changer in Korea. Japan, the complications of CPTPP and the US withdrawal of TPP, and I get tongue-tied even talking about it. Fortunately, they made it easy for us. We're all on the same schedule now, Simon, which means we're going to be at 23.3%, as you said there, April 1. And so that's good news. Those years of that 38.5% tariff in Japan, again, this makes us that much more competitive against their domestic beef, pork, and poultry.
Agree. And Brett, well, we've jumped here to the free trade agreement, New Zealand lamb at the center of furor in the United Kingdom. So I guess, Brett, you never can quite be sure in some of these markets that nothing's a given. So it's become the center of the debate when a conservative minister came out and basically said it's far better for lamb to be produced in New Zealand than it is to be produced in the UK for the environment, meaning that, the New Zealanders do it much better than what they do in the UK, and the carbon footprint is significantly less. So although the FTA has been agreed to, it needs to be ratified by both parties, by both countries. And New Zealand passed it last year, but in the UK, legislation has moved through the House of Commons, but currently it sits with the House of Lords. So, Brett, never say die, but you know what? It's nothing's quite over the line yet. And as we said, Lord Johnson, the Conservative minister in the UK international trade, said the environmental impact in New Zealand is far lower, and makes a case that even if you include transportation costs. There was enormous outcry from others. Brett, all I can say is watch this space. But I think it's a strong, vote for New Zealand to say, here's a trade opportunity. We can produce lamb in a much better way. Therefore, you should give us the opportunity to do so.
Mm-hmm.
Here's a quick summary of beef markets, Brett, as we speak. So Australia's domestic market, we've seen tenderloins, grain-fed, and cube rolls very, very strong at the moment, $40 and $30 a kilo. Saying that, they have come off some of the highs that they were at. Grain-fed strips, though, are surprisingly weak at $17.50. Grain-fed rumps trading at $13 to $14, and cow cuts are weak and likely to soften further. But Brett, this is a brief summary today because, trust me, China's interest at the moment is almost non-existent. People are heading away next week for Chinese New Year. The buyers have stopped ringing, and simply people are waiting till they return. The US, the market's exceptionally quiet. Australian 90s today trading at somewhere around $6.50 to $6.80, Brett, a kilo. And it's weak. We'll discuss more about that in the next coming slides. Slow demand, high kill due to the drought is impacting pricing. And Japan is also quiet. Buying hand-to-mouth, trimming 65s have weakened to around $4.50 to $5 a kilo. 85, somewhere between $6.50 to $7 a kilo. Brett, truly all the markets are quiet. Korea's quiet. Buyers are talking about cheap US offerings. And once again, throughout much of Asia, Chinese New Year is having an impact as people simply go away on holidays. Indonesia is quiet. There was lots of oversupply prior to Christmas. Heavy inventories are now being carried into this year. And once again, the Middle East is quiet. So, Brett, it's all points to a fairly lackluster start to 2023. But Brett, let's talk about the Brazil filling its US beef quota quickly. So these are the figures for the first 9 days of January. And would you believe they've shipped a whopping 21,868 metric tons in a very short period of time. They've used up a third of their allocation within 9 days. Brett, most of the other countries, as you can see there, have barely scratched the surface. So let's chat more, Brett, about how, who, what, where, and why is going to happen.
Yeah, it sounds like, Simon, when the clock struck midnight on New Year's Eve, when we were all having a party, they were knocking on the door of the customs agency going, hey, we got a couple dozen loads here to clear. Happened quick. And here's what we've done. We've taken the Brazilian export numbers month by month against the US import numbers. And so what this tells us is that Jan through November, Brazil has sent 23,744 tons more beef than we've imported. Therefore, that beef could be reasonably in bonded warehouse awaiting Jan 1 to come in. And we didn't have the December data yet for the US, but you can kind of see what's happening here, right? They've been backlogging ahead of this. Once that quota is done, it's done. And it looks like they are pretty aggressive at making sure they get every possible piece of that.
So, Brett, it really points to probably Brazil filling the quota by February, within a month's time, basically.
Yeah, I think that's probably reasonable.
And Brett, we've not really seen, you might say, a rush to the door by Lithuania or Ireland or Japan. You would have thought they might have preempted this and tried to get meat in before, the 26.4% duty was reimposed. But the figures tell us otherwise, doesn't it?
Yeah, it does. And they're pretty insignificant, but yeah, they haven't really made a push. It makes it tough on that Japanese Wagyu, A5 Wagyu coming in and then paying a 26% tariff on the most expensive beef in the world.
It sure does. And Brett, look, the fall in Australian and New Zealand 90s continues. And really, Brett, it's been the case now for almost, dare I say, an entire year of falling imported prices. But interestingly, when we look at where it sits against Uruguay, Argentina, and Brazil and US fresh 90s, let's focus there, on just the recent numbers. And it shows that pretty well fresh 90s in the US have come off the bottom. No surprises there. That was always expected. And we've seen Brazil, Uruguay, and Argentina 90s also bottom for the moment. And to me, Brett, it all points to Australian and New Zealand 90s probably about to start to move higher as we go forward here. So finally, for a lot of people, they've been waiting for this bottom. I think we're there. And I guess, Brett, for what it's worth, US and Brazil and Uruguay 90s prices are all showing the bottom has passed and we're hopefully on the rise. And Brett, when we look at other times in terms of coming into that high seasonal demand period, we can see that in the past, it's been the case. 81% coarse ground. We've got here today that the bottom is in January a lot of the time, and then we start to move higher. And Brett, it's come a little early this year because we've had a rally in the last 2 or 3 weeks, with the expectation is that we'll get the peak in June this year. But Brett, I think it is encouraging to see that demand, as Anne-Marie Roerink has highlighted, is definitely there in terms of consumers dumbing down and their need for ground beef has grown. So expectation of a peak in June this year. 73% coarse ground, it's a similar story. We've had strong demand in recent weeks because I guess, inflation, it definitely is a go-to. And once again, I think the expectation is in June 2023, we're expecting another peak and it could well increase significantly from here. When we look at the round cuts, Brett, it's a similar story. We've got a rising, whether it's insides, knuckles, flats, and clods, but in the last 2 to 3 weeks, we've had a nice rise across the board, all pointing, Brett, to that impact of drought. Finally, we're starting to see numbers tightening up and prices improving. And once again, if we see the seasonal impact, we go back to 2021, I am expecting, Brett, that we could see a sharp increase, particularly if that rain comes, to numbers that might pretty well resemble what we saw back then in 2021. Brett, in terms of Japan-related items, both chuck rolls and briskets, once again, some firmness in the market. And I see this as a positive sign for Australia, for New Zealand and Canadian exporters, because these prices are now starting to lift. And once again, if 2021 is a guide, it will see higher prices before the year's out, particularly if the rain comes to North America. And Brett, once again, we look at the sweet end of the market. Ribeyes, short loins, tenderloins, strips are all showing strong signs of improving as we go forward. Brett, share me your thoughts. This is, all about tightening supplies, isn't it?
Yeah, it's a bit surprising to see because those beef prices went down so hard in Q4. Everything just went flat down, and we're off to the races again. And I think, I think it just
Strong
speaks
demand.
to how tight supplies may be getting, and is it demand? I mean, we claim we're in a recession, but nobody seems to be acting like it.
Yeah. No, it is extraordinary. And it begs the question. I mean, we are about to talk about chicken prices as well here, Brad. And we did see that collapse about 3 months ago, 4 months ago in chicken prices. We know now that, beef, ground beef, but if you look at the 77 CL burger, now chicken is substantially cheaper in terms of breast prices. Brett, no surprise really because of the production, is it?
No, and you look at the green line here. The green line is the year-over-year change in breast price. The blue line is the year-over-year change in production, and the red area is when you have production gains. Now, if you look at that chart, anytime you have red on the chart, you have falling prices generally, or prices at 0 or below on the right axis. And so when we look at 2022, those prices came crashing down, but we averaged 6% production growth in Q4. And it was really the second half of the year as we really pushed the lever ahead, produced more chicken. Boy, it really took the steam off those breast prices. Pretty shocking fashion, really.
It is. And I find it fascinating, Brett, given that chicken has been so cheap, but we've just shown you that we've had a rally in a lot of those beef cuts across America. So at what point does chicken step in and start replacing beef? Right now, it hasn't occurred.
No, not yet.
And Brett, we saw a price of 96 US cents a pound. It's fallen a dramatic 73%.
Wow.
Since June last year.
And I mentioned turkey breast is still $6 a pound, right? That's incredible.
So I think it's definitely one to watch, Brett, in terms of, truly chicken will be, putting pressure on parts of the market, no doubt.
Yeah.
But Brett, it really hasn't held back the beef packer margins, has it, in America? I mean, last week they came in just below $300 a head. So, Brett, we've seen subdued pricing in terms of cattle. It really hasn't reflected, I guess, where supply might be should rain come. But at the same time, we've shown that pricing at a wholesale level has improved dramatically. And that probably explains, Brett, why these margins are where they are today.
Yeah, it is interesting. That's the driver of these margins is that cutout. The cutouts bumped up and away it goes. Now, that's not great news for the packer because we know how tight these cattle supplies are going to get. And that money is going to flow out of their hands here in the coming months, especially if they can keep these cattle prices low.
That's right. And so here's the forward curve, Brett. I mean, it's very subdued up until August this year. And then as we move into next year, 2024, it shows almost an 8% increase on today's levels. Very strong. Brett, I think that this is too subdued. I think that if once again we get rain, as Art has pointed out, that April to August period could change dramatically. This is probably a buy at the moment, dare I say, Brett.
Yeah, I think, the best price we have in 2023 is $1.65. We've had fed cattle at that 159 range already. The highest price we ever had on fed cattle was $1.70 there in 2015. And I would say from a global standpoint and from a US standpoint, the fundamentals are way more bullish today than they were in 2014, 2015. Yeah, I look at these and go, if I had to bet one way or the other, I would take the upside on this chart right here.
You bet.
Pork thoughts. So one thing that's happened here since we've talked in detail about the pork markets in the last 3 weeks is U.S. pork just became the most affordable on earth. U.S. hogs are the cheapest hogs in the world today, below Brazil, below Europe, below everyone. And I don't know if that's really a badge of honor, because if you're trying to make money, it's hard to make money when you're the cheapest on earth. We've taken our margins negative, but what that means is for overseas buyers, they're going to be sniffing at U.S. pork a lot harder than they were over the last year. You can see there that big drop in China. We'll talk about that. Chinese hog prices are almost the same as Mexico. Mexico doesn't have a 25% tariff. They don't discount frozen pork, and they are a truckload away from the U.S. So you can see there, no real optimism for China right now. And again, that U.S. price just tumbled lower. Now, this is the Iowa State margin data for farrow to finish margins. And this was only through December, down $20. I think most people would suggest this is maybe a little bit optimistic, this Iowa State data, that it's probably not as good as this says. And with this last 2 weeks in the hog markets, I would say that red bar is going to be closer to $35 red now. Now, we're no stranger to this. We lose money in the winter and make money in the summer, but it was a pretty rapid drop in these hog prices here the last 2 weeks. Looking more broadly at the U.S. swine herd, you can see there the market hog inventory. This is based off the Hogs and Pigs report. This is based on the first day of the last month of each quarter. Our market hog inventory is down 4 million head in 2 years. 4 million fewer hogs 1st of December than we had 2 years ago. That's pretty significant. U.S. pork production will be down 2.5% for 2022. Sow inventory down 400,000 head in 3 years. And we continue to battle some fairly serious disease issues in the swine sector. The disease issues aren't over. And so I think from a fundamental standpoint, supplies are fairly tight in the U.S. going into 2023. Now, one of the major wild cards, we've talked about this a lot, right, is the Prop 12. Supreme Court heard the arguments. We should hear something on this, Simon, I think in the next 60 days. The next 2 months, there's going to be a ruling. California moved their implementation date to the middle of the year just so there isn't chaos the day this is announced. But this case has big implications. I've talked about this. Manufacturing's watching this. The auto industry's watching this. Everyone's watching. Manufacturers want somebody to put a stake through the heart of this California theory that they can go and impose rules on the other states. And so it's a big case. It could trigger a cascade of regulations across the country in pork and outside of pork. Now, nobody on earth knows which way this is going to go. But we do hear that about 3% of our hogs are compliant, and California consumes about 12% of our pork. Now, some guys say, let them go hungry, right? They want to pass these laws. Too bad they don't get the pork. The problem is the other 49 states are going to have way too much pork if that happens. And so it's a big high stakes case, and it's just a game about guessing judges. Now, USDA put out a report talking about this, and this shows the states where there is currently a ban on the use of gestation crates. And then the red states there, you can see California, Massachusetts. That's where they're trying to impose these rules on other states that are using those crates for their retail sales. So the 9-state total represents 3% of pork production, the 9 states that are pushing around this. But they hold 29% of our population. And so, like I say, if this goes one way, these 9 states, they might follow along with California, and there may be others. Anyway, it's a guessing game, right? And whichever way that court rules, there's going to be hog farmers scrambling to comply, or there's going to be hog farmers hoping that it's over forever. But we'll see. Like I say, we don't have a date, somewhere in the next 2 months.
Brett, the feedback in Canada when you were there last week on this, does this also raise alarm bells for them as well?
Oh, absolutely. Yeah, absolutely. And we're really rowing the same boat, right? The US and Canada when it comes to pork and hogs and the trade. And yeah, there's a lot of concern in Canada about how this goes as well. And there's farmers that are proactive that are already planning on this, that are saying whether or not the court rules, this is what consumers want. And so yeah, we'll see where it goes. Good meetings in Canada, by the way. Great meetings in Banff last week at the pork seminar. Great group up there. So I talked about this cheapening of U.S. pork in the global markets. Take a look at this chart. This is the EU price less the U.S. pork price. And there you can see EU pork spent the last 2 years discounted to U.S. pork, pretty sharp discount, $40 a hundredweight discount 2 years ago. But if we look at just what's happened in the last 12 months, that price spread has moved $62 a hundredweight. From the EU being discounted to US pork to now the EU is a $22 premium to US pork. And so that's a major shift. The US and EU are very competitive around the world in most major markets. Because of our tight labor supplies, we couldn't bone hams for Australia last year. The EU took 90% of the Australian ham market last year. That could change. We can see even with our labor issues, that is a massive shift in the two biggest global pork exporters. If we look at it this way, there's what it looks like just comparing across the board EU and US hog equivalents. And there you can see that flip right on the right-hand side of the chart. Not unheard of, but boy, it's a major shift from what we've seen the last 2 years. Because of that, Simon, I've changed my forecasts here. And I've actually bumped my forecasts higher. We're up 3% on pork exports for 2023 now because of what we can do in a lot of these little odds and ends markets and possibly in Japan as well. The US lost some serious pork market share to Spain into Japan this last year. And based on those prices, we could see that split back. I would think the Japanese buyers in the next coming weeks and months are going to be shifting some orders to the US based on these price levels. Mexico, I've got record high. China, Hong Kong, I've got down a little bit lower next year. So let's talk about China. Talk about major shift, Simon. We go to interviews for 3 weeks on our podcast, and I can't believe everything that's happened in 3 weeks. China hog prices just keep falling. They're now down 48% in 3 months. Now, I still think this is heavily driven by demand. I think it's just simply the effects of COVID in the market. And once you stop buying pork, we all know what happens. Hogs get backed up. And I think there's a big backlog of hogs in China through this first COVID wave that are going to carry on for a while. But this price level has really raised concerns. The NDRC came out and said, whoa, we're at 5.9 on the pork to and the hog to corn ratio. That triggers a level 3 alert, and I'll tell you what that means in a minute. But people are very concerned. Most suggest that it's the COVID infections that have really dropped that Chinese hog price. So here's the China hog to pork price ratio, and it's as simple as it sounds. It's in RMB. So a kilo of hogs, if we just go where we are January 13th, is 4.9 times the feed price. If we look back into October, it was 10 times the feed price. And so this is basically the margin. This is Chinese hog margins. And the government years ago came out with this plan right here. They said, we're going to track the hog to corn price ratios, and we want to keep it between 6 and 9. That's where we're comfortable. If it gets above 9, well, we'll release pork into the market. That means margins are too big. If it gets below 6, depending on how far below, we're going to take some drastic action to support the industry. Well, I just told you that price hit, or that ratio hit 4.9. It's below the 5.1 level, when what the government said they would do is do heavy government purchases of pork off the market. They would subsidize, and they say they will reduce imports. Now, there's no good way to do that. But what I'm saying here, I don't see them anxious to relist the pork plants. They have no need for imported pork right now. They're worried about their farmers going broke. If we look in October, it was 9.8. That's what's happened in 3 months. It has went the full length of that spectrum. And so those weak Chinese hog prices mean there is no appetite for imported pork, not in the market and not by the government. And we've got a long ways to go to straighten it out. Now, Simon, I think we watch here post-Chinese New Year, this backlog of hogs in China, somewhere we work through it. But China didn't oversupply their hogs in 5 months. Somewhere we're going to see these prices go up. We're going to be back above 20 RMB probably by the end of Q1 and back to where China's supply and demand comes back into balance to where some imports can go in. But for now, don't plan on selling anything to China.
No.
Mexico, I've showed you the chart. That's how it ended the year. Still very expensive pork in Mexico. And if we compare that Mexican hog price to the US, that tells me Mexico is our go-to market. And they're going to keep buying hams aggressively when we have almost a $40 spread, $40+ spread between US hogs and Mexican hogs. The real story in Mexico has been feed prices and disease issues. Both of those have combined to keep those prices way elevated. And so hams have come down. We've got some very cheap hams, and I would expect that that's a pretty easy sell right now, selling those cheap hams into Mexico. So we'll wrap it up here, Simon. Key thoughts for the week.
Well, the last hurrah from La Nina. Brett, we had, extraordinary conditions in the Kimberleys. Is this really the last we've seen those, the warming of the waters around Australia changing dramatically in the last 6 to 8 weeks in particular? And probably we are one step closer to El Nino. And that is going to have a major impact this year in markets, whether it's livestock or grains around the world, Brett.
Agreed. China's first COVID peak is past, at least in the cities. And you can go on Twitter, you can go on social media and see it's pretty ugly what's happened. Hospitals overwhelmed. I mean, this is a country that doesn't have a lot of critical care hospitals. And so it's been pretty devastating on China's elderly. But what this means, these people are going to be in party mode, right? They're going to be ready to spend money and vacation and do things they haven't been able to do for 3 years. And I think that's going to hit pretty quickly here in the coming months.
So a consumer-led recovery is what we're talking.
That's what we're expecting. Commodity super cycle ends. Simon, it's a bust, I think. I think it was February 2020 when I went with my public statement that we are in the beginnings of a commodity super cycle. So it lasted 2021, 2022, almost 3 years. Yeah, the bottom line here, most commodities and input prices are going to remain well above pandemic levels. The inflation deniers are going to be proven right because those high-priced fertilizers after 12 months, it's going to show 0% inflation. All these things, this cycle stretches way longer than 12 months. And we're going to see, especially in the back half of this year, we're going to see a lot of inflation charts actually go negative. Well, that doesn't mean we're negative. That just means compared to the insane levels a year ago, we're negative. But I think we're just going to have to adjust to a new and higher level for most commodity and input prices.
Yet the US market is showing signs of strength, Brett. So even though David speaks of a mild recession in North America in the next 3 to 6 months potentially, but as we've said, tightening US beef supplies will override the recession risk, meaning no matter what, I expect prices in beef to move higher when the rain comes, even with or without recession, Brad.
It is interesting. Like I say, we're in a recession, but we're not really acting like it, at least not yet. US hogs are now the cheapest on earth. China prices are falling. They're half the world's hog market. I think that's going to be temporary. It's going to take a month or two here through the holidays and through the backlog of hogs. for Chinese hogs to improve. But I think the global buyers are going to start ringing on the phones here in the next 2 months, and we'll probably take back some of that lost Japanese market share, particularly to Spain.
So it points to an interesting last half of this year, Brett, doesn't it? I mean,
yeah,
I can't help feeling that to a certain extent, Japan is hand to mouth. You've got Korea really banking on getting more and more US beef products. And it's once that tightening occurs, and if China is under a consumer-led recovery, it's game on again, Brett.
That's right. Yeah, it is going to be an interesting year. I think our recession risk is in the back half of the year, and China might be going gangbusters in the back half of the year.
I think,
interesting.
Yeah, and potentially Australia regaining its licenses couldn't come at a better time.
Yeah. Okay, well, great to be on with you, Simon. As always, I feel like we got through a mountain of information there. I hope people have the time to be able to get through this and find this of value. As always, if you have questions, don't be bashful. Drop us a line. Thank you, Simon.
Good to be back, Brett. Thank you.
Yep.
This has been Monday Thoughts for the Week with Brett Stewart and Simon Quilty. This podcast is a service for subscribers of Global Agri-Trends. Clear, concise, market intelligence. For more information, visit our website at www.globalagritrends.com.